Hi everyone, Santosh here. I hope you are doing great. In today's session, we are going to explore VWAP, what it is, how it works, and why it's so important in trading. We also talk about VWAP standard deviation bands and how we can use them to make more informed trading decisions. Before move on, we need to know how to set up VWAP with standard deviation bands indicator on TradingView. To do so, if you look into this slide, which is plain TradingView chart, you just need to click on indicators and then choose volume weighted average price, which I highlighted here. Then you can able to see three lines where center line is VWAP and remaining above and below ones are standard deviation bands. Then you just need to click on the VWAP line, select it and then right click on it to go to settings, which I have shown here. Once you have clicked on the settings menu, then you can checkbox additional multiplier bands with settings as 0.5, 1 and 2 standard deviations respectively, and then you can adjust the color as like mine or as per your wish. That's it. Once done, then you can able to see VWAP with standard deviation bands as in my screen. So now, what is VWAP? VWAP stands for volume weighted average price. Think of it like a moving average, but instead of just using price, it also factors in volume. This means VWAP gives us a more accurate sense of average price based on how much volume is traded at each price. When you add the VWAP indicator on your chart, you will see a line that starts fresh each day. Volume resets at the start of the day. Institutional traders often use VWAP as a benchmark. They prefer to buy below VWAP and sell above it. Now around the VWAP, we also have standard deviation bands. In my trading view, the VWAP is shown as a red line and we have pink lines that mark 0.5 standard deviations above and below, and then we have white lines at 1 standard deviation and green lines at 2 standard deviations around the VWAP. These bands help us see how much price is fluctuating around 1 standard deviation, which is about 70% of the volume is traded on that particular session, and around 2 standard deviation bands, which is 95% of the volume is traded around those zones. Of course, just because price goes beyond 2 standard deviation doesn't mean it will always revert back to the mean. In a choppy or non-trending day, there is a high chance, but in a strong trend day, the price may form a new value zone. So VWAP with these bands helps us recognize whether we are in a range bound market or a trending market. So now that we have identified VWAP and the standard deviation bands, let's talk about VWAP rhythm. I look at VWAP, which is that red line along with the pink line above it, the plus 0.5 standard deviation band. If the price is moving between these two, I consider it a slow paced upward rhythm. The price moves between VWAP and the white line, which is the 1 standard deviation rhythm, then it's a normal upward rhythm. And if it goes from 1 standard deviation to 2 standard deviations, then it's a fast paced upward rhythm. The same logic applies in reverse on the downside, where the price is between VWAP and minus 0.5 deviation. It's a slow downward rhythm. Between minus 0.5 and minus 1, it's a normal downward rhythm, and then beyond minus 1 to minus 2, it's a fast paced downward rhythm. All these movements are what I call imbalance rhythms, slow, normal or fast in both directions. But there's also a rotational rhythm. In a rotational market, price doesn't stay just in one direction. Instead, it keeps flipping between these bands like a cycle, going from minus 2 standard deviation to plus 2 standard deviation and back and forth, with traders comfortable buying near VWAP and selling above it. So, once I identify whether it's an imbalance or a rotational rhythm, I know how to act. If it's an imbalance rhythm, depending on the rhythm, slow, normal or fast, I might enter long near VWAP and short near the outer bands. On the other hand, if it's a rotational rhythm, I look for mean reversion trades, buying when it drops to minus 2 standard deviation, selling when it rises to plus 2 standard deviation. This way, I can align my trades with the rhythm and stay on top of the market dynamics. That's how I use VWAP rhythms to fine-tune my trading decision. Thanks for watching, and I have been attached a part 2 which shows VWAP with standard deviation bands real examples, and in part